The top story tonight, the fourth quarter earnings season has begun and TCS has missed estimates. The IT bellwether missed the mark on margins and revenue growth. On constant currency terms, the revenue growth was at its slowest pace in 11 quarters. Reema Tendulkar is here with the TCS report card. Reema, over to you.
TCS misses the mark on revenues and margins in Q4. Constant currency revenue growth of 0.6% is lower than consensus expectations of 1%. Margins are flat at 24.5% versus the company's guidance of margins of 25%. The management in the press conference said that the client sentiment weakened in the month of February and March, impacting the revenues and margins. And while budgets are not being cut, there are no large-scale project cancellations. Discretionary projects are being put on hold, and the client sentiment appears to have weakened marginally. So there is a miss on revenues and margins this time, and that's a bit disappointing. And even the near-term visibility, particularly in North America, appears to be a bit clouded. Internals, BFSI growth has slowed down to 9.1%, so that's a bit of a disappointment. Retail continues to hold up well. The order book has been very strong at $10 billion. In fact, the company has clocked in the highest number of large deals this quarter. So the order book is holding up very, very well. Attrition continues to tick lower, 120 basis points down on a quarter-on-quarter basis, while the hiring number has been fairly muted. About 800 employees have been added on a quarter-on-quarter basis. Krithivasan will take over as the CEO and MD from 1st of June.
This quarter has definitely come in weaker than what we originally anticipated, and primarily coming out of North America. North America had slowed last quarter, but our expectation was that it is a cautionary stance from clients, and based on our discussions with clients, and we had expected that it will bounce back into the first few months of the new year. That has obviously not happened. Calling it forward is difficult, so we are doing what's in our control in terms of positioning ourselves to be able to handle it on either side of it.
From a margin perspective, what we, like Rajesh pointed out, what we saw at the beginning of the year and how the macro environment as well as client sentiments turned increasingly negative getting into February as well as into March is something what reflected both on the revenue side and on the cost side. And if you look at it with discretionary spend getting impacted, the revenue gets impacted immediately.
So on the BFSI side, last quarter itself we had called out there are some, because of the interest rate and inflationary regime, like there have been issues in the insurance sector, capital market and mortgages. What changed this quarter more than anything to do with inflation or interest rates is sentiment, right? Like what happened with one in the banking sector, the sentiments are quite down and people are all not sure what's going to happen. And so there was a greater rush to preserve costs.
Let's give today's market action now. Sensex and Nifty have gained for the 8th straight day. Sensex gained